Hello and welcome back to another episode. Today we're looking to the near future for another silver surge. This time with sustained trading above $30 an ounce. We're going to look at the historical price performance of silver and what catalyst just occurred that makes $30 an ounce silver possible. Stay tuned. Before we begin, please take a moment to like and subscribe to support the channel. Thank you. As we get started here, I want to lay the groundwork for this video. There are always claims out there that silver is going to outperform, we are running out of silver, it's going to the moon, etc. This is not one of those videos, and it's not a forecast either. What we're doing is looking at some of the claims that were made this year and examining the evidence with a level head. Let's start with why we think it's credible enough to deserve some attention. First, this isn't a wild claim of $300 an ounce silver. We're looking at a forecast that says silver is going to hit and trade above $30 an ounce and potentially go to $50 an ounce this year, which seems reasonable and attainable with the right catalysts in place. The forecast for $30 silver was also made by the Silver Institute, which does a good job of analyzing the market, and they also tend to avoid making wild claims. The $50 an ounce remark came from a precious metal company. Now, $30 an ounce would be a 10-year high for silver. It last hit $30 spot in February of 2013, which means we're probably due for a sustained rally and some new trading ranges. There's been a lot of inflation, and while silver does take a while to catch up with inflation, it's starting to look like time. In addition to inflation this year, we are forecast to hit 1.2 billion ounces in silver demand, which would be the second highest year of silver demand in history. The Silver Institute did say that there are some headwinds which we agree with, such as a slower economy in China and the Fed slow-walking rate cuts this year. Silver has an inverse relationship with interest rates, similar to gold. The cheaper our borrowing costs are, the more we collectively buy things that use silver. But we are looking at rate cuts this year. In March, the Fed reaffirmed their projections for 3 rate cuts this year, and we're most likely looking at summer for the beginning of those cuts. And the timing of this video is tremendous because we're shooting it right after gold hit $2,200 an ounce for the first time in history. Now, let me explain why that's significant. Many analysts and pundits often cite silver as an outperformer of gold, and that silver is, generally speaking, a close follower of gold price movements. In other words, if gold moves up, silver will move up too, but with a lag. Now, the CEO of Wheaton Precious Metals predicted earlier this year that a $50 mark for silver would be possible if gold moved through $2,200 an ounce, which again, we just hit. Of course, when gold hits a significant milestone like breaking through the $2,000 barrier or the $2,100 barrier, most recently the $2,200 barrier, there is a sell-off period. So right now at the time of filming, gold is trading near all-time highs at about $21.76 per ounce. Since gold began its rally, silver has advanced to trade around $25 per ounce. We're currently waiting to see if it will move higher. Now, forecasters and analysts will often use the gold to silver ratio to predict future prices. So let's look at that. If gold is consistently trading at $2,200 an ounce and the gold to silver ratio improves to 78, that will put silver at $28.20 per ounce. Now, why do we pick the number 78? The gold to silver ratio is a ratio that describes how many ounces of silver it takes to buy 1 ounce of gold. So gold to silver ratio is more like saying 1 to 78. And 78 is the lowest it's been in the last year. But if you make the case for silver hitting a 10-year high, then we could look at something like a 5-year low where the gold to silver ratio was 63, in which case silver would be trading at around $35 an ounce if gold is trading sustainably at $2,200 per ounce. We think it's reasonable that silver would be priced higher today than 10 years ago, as almost everything else is priced higher today than 10 years ago. 10 years ago, the price of 1,000 board foot of lumber was about $330, and today it's about $610. Copper was about $3 per pound, and today it's about $4 per pound. Coal was $68 per ton, and now It's about $128 per ton. Now, don't get me wrong, silver is higher today than it was between 2014 and 2020. That much is true. But silver was trading regularly above $30 an ounce between 2010 and 2013 in the wake of the great financial crisis. It does seem as though we are in a period where silver is undervalued and it's reasonable to think it has room to rise. Now, those of you who watch the channel regularly will know that we are against sensationalism, and so we find it necessary to part with some words of wisdom. We would be unsurprised to see silver rise for all the reasons we discuss in this video, but there are no guarantees. Silver prices can be extremely volatile. If we do see silver start to trade above $30 an ounce again, watch out for the people who claim silver is on its way to $1,000 an ounce. They are going to come out of the woodwork, and so far, none of those claims have come even remotely close to materializing. Do we think $100 silver or more is possible? Yes, but let's get to $30 and $40 and $50 an ounce silver first before we start talking about triple-digit silver. If you want to invest in anything, most financial advisors will recommend a dollar cost averaging strategy. This is where you invest a little at a time, and over time you accrue a silver stack that has a lower cost on average, and therefore your potential returns are much higher when you go to liquidate. While you technically could get lucky timing the market by buying at the low point and selling at the absolute high, in reality, very few people ever manage this. We have an auto invest program at APMEX where you can set up recurring orders to continuously add to your investments over time and take advantage of the benefits of dollar cost averaging. This is the easiest way to do it, and it only takes a few minutes to set up. We'll leave a link down in the description below if you want to learn more or set up an auto invest. And that's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.